So I think you had a pendulum swing. The exposure to the US, as you know, was driven partially by the benchmarks, which had reached a very, very high level. The dollar was strong. And of course, the US exceptionalism, if you want, with the innovation and the AI, had pushed a lot of people in that market. The gap in terms of valuation versus Europe and Asia had opened up. And with the uncertainty that we've seen since the new presidency, that has created, if you want, a wake up call for a lot of global investors who said, well, maybe I don't need to be so much underweight in other parts of the world. So that's number one. Number two, in other parts of the world came up new dynamics, such as the fiscal plan around defense out of Europe, which is going to be quite transformational. And of course, the fact that most investors are not invested in China anymore. Well, China has surprised by some of the innovation advantages that it has demonstrated. So as well as Japan, Japan is now back on the map. So you've had those push and pull factors. That's meant that people have rebalanced their portfolios. However, it's not the end of exposure to the US market for global investors. There's just too many good companies there.
Right. So I'm glad you mentioned China, because where to reallocate out of the US? Many go to Europe, but also EM, maybe Brazil, other parts,
Yeah.
and China. Where else is there interesting opportunity?
So if you look at EM in general, Taiwan, of course, is interesting, not without volatility, but if you think of it as one very large center of excellence for technology, semiconductor, and AI, definitely there. India is an area that we still like very much. Tipping point in terms of demographics, tipping point in terms of growth, if you want, and that consumer wealth growth, and also perhaps a more apolitical nation versus what everything else going on in the world, you know, particularly around tariffs negotiation. So that is in Asia what we like. In Latin America, of course, some interesting countries, and European emerging markets are quite small. So there, I would play it mostly through developed Europe.
So again, as we think about Europe, Virginie, as you talk to your clients, is there a sense that Europe as an economic entity and as an investment opportunity has kind of been reborn, and it's something you really need
Yeah.
to think more about?
Yeah, I agree. So first, you know, valuation. Second, rates are coming down. We've had Christine Lagarde's message from the last cut in rates, so that's been positive. Inflation below 2%. So you got that macro element that's been supportive, but it's really about that package, and we're talking close to $1 trillion
Mm.
to be invested in infrastructure and defense, which of course will, if well implemented, and that's the big question, will really create a synergetic ecosystem around infrastructure, technology, etc. So there is an element of rebirth of Europe, but also markets are much cheaper than in the US.
How does then the tariff landscape fit into that?
Yeah.
Do you kind of ignore it? I mean, I hate to say that, but do you kind of put it on the side and be like, that's going to be what's going to be? Or do you need to re-rate based on any sort of baseline 10%?
Yeah, exactly. So interestingly, the ECB has a model that they've run on 10 plus 40, so 10% sort of universal tariff plus 40 on China. And their finding is that it would have more of an impact on growth than inflation. Of course, you can't ignore tariffs, but we have a lack of clarity. And I think that except for very large unexpected news, the impact of tariffs on markets is diminishing. If you want, the marginal impact is diminishing. However, you have to be very careful about the sector. So if you take the auto sector in Europe, as you know, big employer, probably going to be hit by tariffs, given the the competition between the US and Europe. I think that's an area to be very careful about. But within Europe, you have a lot of companies that are relatively immune to the tariffs, and that's where you can also, if you want, find good opportunities.